All right, what is up, traders? Welcome back to today's Teachable Moment. Today is August 15th. It's about 12:30 in the afternoon. And guys, what I got up here for you is a chart of the Canadian dollar. And guys, I got long the Canadian dollar a little bit earlier this morning and just kind of want to go through that trade with you guys. Now, every single morning I go through a review and I actually update all of our traders here at Trading Price with my review. It's one of the levels that we had called out here on I initially saw this on a 4-hour chart, a rally, base, rally, pretty good follow through with 1 high, 2 high, 3 highs on the outside of that. But this was a little bit of a higher base than I wanted to see. So when I identified my levels, what I did was I came into a 1-hour chart from a 4-hour, and well, before I go a little bit too fast here, I can see that we're kind of in this sideways trend, right? We had higher highs and higher lows, but recently we made a lower low and a higher high. So we kind of have this extension of trend going in this kind of way, which makes it a little bit more difficult to be a trader in, right? We really want to trade with the trend. We want all of our stacking the odds studies in place. But that doesn't mean that we can't find other levels to trade with. We just have to use a couple of our strategies in place to do that. So what I did was I came inside of a 1-hour chart, and what I found was I found a rally, base, rally, leg out, 1, 2, 3. That all the candles close at their highs or near their highs that create this rally outside of this level here from a week ago, Monday. Price came back into that area. Now, I got long right inside of this area. I only have one contract long right now, but we were able to execute out and make a couple $100 on this particular trade. Now, there's a reason why we only took 2 contracts here on this trade, on this particular account. One is because we came down and we were very, very low on the RSI. Number 2, it was a very small risk here. So I was willing to accept a couple $100, not even, maybe $180 of risk to potential upside. So we got stopped out on our first target right below these lows pretty quick. And now we're moving upwards. But I guess the thing that I want to talk to you guys about in this teachable moment is when you're in kind of this sideways trend and you're below RSI and you're at the bottom of the curve, taking profits is something that you're going to want to do. So we took our profits where they were due, and then immediately I moved the stop on my second target to break even. And guys, again, this is about reducing risk in trading and make sure we don't lose money on the trade. So we came in, we immediately moved out. We've hit our T1. T2 is up here. And if I come up here, we're looking at just below this curve of this area down, or above this high that we have here. Right before we get to this 889 is what I'm looking at. Now we have 2 options. We can move our target and implement an 889 strategy, basically back up to this area, drop, base, drop. That looks like a pretty good selling area that we have available up here, kind of a level on level. I don't know if price is going to make it all the way back up there, though. And the reason why I don't know if price is going to make it all the way up there, though, is because the momentum on our chart is so far below 40 on the RSI. But one of the other reasons why I got in is because we have divergence into this area. We have a lower low in price and a higher low on the RSI. And so when we have that type of price action going on into a level, that is an area where we feel confident we're going to get a bounce from. Now, just because we have divergence, we're not above 40 on that RSI. So I don't think that the probability of us making new highs from this area is very likely. That's one of the reasons also why I have this target, about 50% of the retracement from the most recent impulse down, right about there, just above that. But we can monitor it. So we just broke a new high here on our 30 minutes. So I could change into an 8 and 21 EMA. However, just looking at the chart right here, I'm not sure that we're going to be qualified for that yet because we need the 8 to cross above the 21 to implement that. So if nothing else, we hit T1 on here and we moved our stop to break even. So we're guaranteed to not lose a trade or not lose money on this trade. And once we cross above that, about 776, I can implement a trailing stop strategy. So what I'll do is I'll just come in here, right about there, and let me know if price gets above that, and then I can lock in more profit implementing a trailing stop strategy as we head north, hopefully to our second target. But guys, again, trading is about reducing your risk in trading. It is about reducing the probability of you losing money, and finding levels is just one half of the battle. The management of the trade is the other half of this. So we implemented everything that follows our rules here on this chart, and we're going to let this trade play out. But guys, just one of the ways that not only can we find turning points here in price, but how we limit that risk, right? So that's one of the things that we do. So guys, you can always find us at tradingprice.com to find out more about this, and obviously follow us on YouTube to figure out more what it's like to trade once you find that turning point. And guys, keep an eye out here for 0.711-ish area. Likely to be a turning point if we come back up here. And all of our other stacking the odds studies come into favor. So guys, with that, take it easy. And I hope you enjoyed this teachable moment. Follow me for more teachable moments like this. All right, guys, take it easy.